Hello and welcome back to Core Finance. I'm Matt Brown, joined by Connor Campbell, financial analyst at Spreadex. Connor, good morning. We're going to look at cable. What's going on?
Yeah, yesterday it had a bit of a hairy day, really. I think, it was an empty economic calendar, which meant investors didn't really have any choice but to focus on sort of the political drama that happened over the weekend and the week before. Obviously, not good news for the pound. Theresa May's whole premiership has been defined by uncertainty, but yesterday sort of, multiple factors to do with Brexit, that leaked letter from Michael Gove and Boris Johnson, as well as the departures of Priti Patel and Michael Fallon, the last 10 or so days, as well as sort of threats from Michel Barnier that the EU won't move forward with trade talks or anything like that if the UK don't sort of produce a divorce bill figure. I think those swirling sort of issues for Theresa May mean she's likely at her most precarious position since just after the election, really.
Will we have an election next year?
I don't know. It's difficult because of Brexit. I think if we remove Brexit, then the entire situation changes. But if we weren't in the midst of negotiations, then yeah, obviously. Like if you had all of the other issues around May, the lack of confidence and stuff, it would be an automatic yes. But it depends on how willing are the Tory party to potentially lose that election. They sort of ran close back in June, far closer than they thought. Confidence in May has only rapidly declined. I'm not quite sure who they then put in May's place that could generate enough popularity to really improve their situation. So they might just be better off sticking with May until after Brexit, blame the mess on her, and then start afresh once it's over.
And for pound traders this week, what are the key numbers to look out for?
Yeah, well, you've got that classic trio of inflation, wage growth and retail sales figures this week. Already we've seen inflation today coming at 3%, and that's a smidge lower than the 3.1% that was expected, but still very, very high. Yes. Tomorrow you've got the jobs report figures in general, but specifically the wage growth figures for the 3 months to September. I think including bonuses, they're meant to fall from 2.2% to 2.1%, so obviously that gap between inflation and wage growth ever widening. UK retail sales on Thursday, September, they were that very ugly minus 0.8%. I think in October they're meant to bounce from 0.2%, but it's still not great, and obviously that figure could easily underperform expectations. What's interesting is, now we're post Bank of England rate hike. Before, that was sort of the pound's roadmap for how to react to these figures, especially the inflation figures. Anything that seemed like it's going to push sort of the MPC towards a hike, that was good for the pound, even if the figures themselves were a bit ugly. Now it hasn't got that. The Bank of England doesn't seem likely to raise rates for a while now. So basically, bad data might just be bad data to the pound. So it could be a pretty tricky week for the pound going forwards, because especially the wage growth and the retail sales figures on Wednesday and Thursday, they're pretty ugly. So and there's now that there's no chance of another hike, I don't really get what positive juice the pound finds out of those things. However, there is also a bit more data on top of this. I think on Wednesday there's the US inflation and retail sales figures, neither of which are meant to be very good. I think perhaps the US inflation figures meant to fall from 0.5% to 0.1%. Retail sales down from 1.6% to 0%. So unlikely that will really affect what the Fed does in December. However, we're getting towards that December meeting. We're getting towards that potential rate hike. There's always room for a bit of doubt to creep in. If the pound is going to be helped out, then maybe those weak US figures on Wednesday could help distract from the pound's own situation. In terms of our clients, they've been buying around sort of the 131 mark. I think that they were doing the same last week. I think they're happy to see it around that level and hopefully a bit above, but they seem to not think it's going to fall too far away from that level.
So I think probably a bit of volatility around numbers, no big moves, obviously, because of the Bank of England aren't really going to react to any moves negative or to the upside. And, to summarise, look for the dollar. Our US friends may drive this pair. But in the meantime, Connor, thank you very much for joining us here today.